Hello there, welcome to this edition of Global Business Africa. There's plenty that's happened right across the African business landscape today. We've got the latest on all the stories you need to know about from Cairo, Johannesburg, Nairobi and Lagos. I'm Ramanyang, here's what's coming up. Kenya's flag carrier will resume flying to Liberia. We'll have the details. We also have the latest from the second edition of the Africa Global Business Forum in Dubai. And the economic partnership agreement between Kenya and the EU has lapsed. What will be the fallout? We're counting the cost a little later. Let's start in the transportation sector. Kenya Airways plans to resume flights to Ebola-affected Liberia from the 24th of October. Air Cote d'Ivoire is also expected to resume flights to affected countries within a week, and that is according to government officials there. Now, while addressing the 69th UN General Assembly, Liberia's Foreign Affairs Minister Augustin Gaffouan praised both Kenya and Cote d'Ivoire for relaxing travel restrictions and resuming flights. Gaffouan said that travel restrictions imposed on Liberia and other countries affected by Ebola in West Africa not only undermined humanitarian aid efforts but also aggravated the economic damage caused by the virus. Air Cote d'Ivoire, Nigeria's Eric Air, Togo's A-Sky Airlines, British Airways, Emirates Airlines and Kenya Airways altogether cancelled a combined 76 scheduled flights to Guinea, 70 to Liberia and another 70 to Sierra Leone. Now, still in West Africa, Ivory Coast posted a record cocoa crop in the recently ended 2013-2014 season, harvesting nearly 1.8 million tons of beans. That's according to government data out on Wednesday. At the same time, though, the government there has boosted the minimum price paid to farmers by more than 13%. The world's top producer of this particular bean also announced it had exported 1.65 million tons of the crop during the season, up 12% from 1.47 million tons the previous year. Wednesday marked the start of the 2014-2015 season. The price range which the Coffee and Cocoa Council Marketing Board proposed to the Ivorian president for this season is markedly higher than anything seen in the last. Now, over the past decade, the United Arab Emirates has invested about $30 billion directly and indirectly into the African infrastructure development sector. At the same time, it's provided a new market for African entrepreneurs. The question several do ask on this end of the world, however, is just what is it that makes Dubai so popular for business, and what lessons can that offer for African policymakers? CCTV's Faminda Miller went to Dubai in search of some answers.
Known as a global village, a business hub and gateway to the Middle East, Dubai has emerged as an attractive destination for African business. But access is key. Sultan Ahmed bin Sulayem is the chairman of DP World, the company responsible for Dubai's Jebel Ali port, one of the busiest in the world.
A lot of business and shipment go to India, subcontinent, but a lot of products also connect to Africa. Many of the Far East services and other services destined to Africa, they drop in Dubai and then they take the cargo to Africa from here and vice versa.
In turn, investors from this region are increasingly looking south, with the African Development Bank forecasting growth of almost 4.8% for the continent this year.
There is a big need in Africa for infrastructure investment, expected to be in the $90 billion or so, and that is big, gives a very good, I think, opportunity for investors from the region to be investing in infrastructure projects which are today, there's a lot of liquidity in the market. Return from deposits is very little, so people look for avenues of better investment.
DP World also operates 6 African ports from Egypt in the north to Maputo in the south. It's portals such as these that contribute to growing Africa-Gulf cooperation, enticing more Africans to Dubai.
Various incentives continue to be a draw card for people from all over the world to come to the Emirates. One of the popular areas for Africans to set up shop is here in Deira, in the middle of Dubai.
This area is the one who has showrooms of all manufacturers or industrials in Dubai. And second thing, all affordable hotels are just available in this area. because this is not tourism area, it's a commercial area. So people coming from Africa or from abroad to buy something here, they need this area to get affordable hotel and to get all product in same area.
From Rwanda, Pierre Insirishwa came to Dubai 2 years ago to open a shipping company.
Dubai is is like a duty-free country, and to get company registration here, business registration, is easy. And as I told you before, his geographical position gives Dubai more chance to get business from abroad.
His shipping business has done well in the time he's been here. But due to the high cost of living in Dubai, Intirushwa's left his family behind in Rwanda.
For my salary, I can get good school in Africa than to bring them here. And really it's painful for me, because when you are spread with a family and you have children which are still, how I can say, which are still young, it's very difficult to be spread with them. But we have to manage.
Despite the sacrifices, Dubai continues to attract Africans trying to make it big abroad. Famida Miller, CCTV, Dubai.
Now, we're still in the UAE. African economies do need to trade more among themselves, even as they seek to boost trade volumes with external markets in Europe, Asia and the Americas. That's just one of the key messages at this year's Africa Global Business Forum in Dubai. African leaders present at that meeting agreed to cut red tape, which hinders business and the movement of goods, capital and labour across their borders.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai. Over 500 delegates are expected to be in attendance, ranging from decision makers to investors, as well as heads of state, including Rwanda and Ethiopia, and members of economic blocs and the African Union.
There is a need for a predictable environment in which investors have to put their money. And therefore, rule of law, transparency, a clear fight against corruption so that it doesn't add the cost of doing business. These are very key. There is no doubt about it. In fact, part of our progress has been made on that basis, in Rwanda, I mean.
The forum is aimed at strengthening ties between Dubai and Africa through the development of business partnerships and opportunities, but also tackling challenges, a lot of them the need for infrastructure. In the last decade, the Gulf has contributed $30 billion in funding to Africa. That's roughly between 7 and 10% of total inflows. It's meetings such as this one that's expected to see those type of investments continue and even increase in areas ranging from telecoms and energy to agriculture. Famida Miller, CCTV, Dubai.
Now, October started on a fairly dismal note for fresh produce exporters and farmers in Kenya. They will be earning a lot less in coming months as new taxes on Kenyan exports to the European Union take effect. According to the Fresh Produce Exporters Association of Kenya, the delay in signing a new economic partnership agreement between the EU and the East African Community has left very little room for reprieve. Now, the two trade blocs essentially failed to reach an agreement over a new agreement in talks that they held in September. The interim EPA between them, signed in 2007, lapsed on the 30th of September. Kenya is the most vulnerable of the 5 EAC states since it's a lower middle-income economy. The other 4 are categorized as low-income economies. A different set of taxes therefore apply to them. Besides paying taxes to the EU under the generalized system of preferences for at least 4 months starting on the 1st of October, fresh produce exporters say they're already feeling the pinch of stiffer regulations introduced by the EU targeting chemical residue levels in cut flowers, fruits and vegetables exported from Kenya. Now, Edward Murio is the team lead at MMC African Law. That's a Nairobi-based law firm. However, he's also a farmer and a stakeholder in the horticulture sector. It's in that capacity that he's with us in studio right now. Thank you for your time this evening.
Thank you.
What do you grow?
We grow a variety of products from chilies, beans, herbs, strawberries,
broccoli and so on and so forth.
broccoli and so forth.
So, and the EU is your primary market?
Yes, EU is a primary market, a small market in Bahrain, a small market in South Africa, but EU is very, very key.
So what has happened to your margins now? Because obviously policymakers on both sides haven't signed an EPA. Do your prices then go up?
Absolutely. The prices have not gone higher, but what will happen is that we are trying to negotiate higher prices. And of course, with the current economic situation in Europe, the consumers are very, very resistant to take any increase in prices. So definitely, our products will become very unproductive.
So let me understand this straight. If you guys negotiate with, say, Tesco's, Sainsbury, whatever, they tell you, yeah, your taxes might be higher, but we're not willing to increase our prices at all. That's the message you're getting.
Yes, yes, yes. So it's us to absorb that cost.
And can you absorb that cost?
Unfortunately, no. Because you're talking about margins of between 4 and 24%. Our profitability is almost equivalent. So any increase in exports will wipe out totally our profitability.
In your opinion, as a Kenyan farmer, should Kenya have negotiated for an EPA alone, aside from, instead of negotiating as part of the EAC?
Well, this is an economic block-to-block negotiations. So they have a number of restraints. They could not have gone alone and negotiate with EPA, with the European Union. But again, there are a number of things which you have necessitated them to decide to go on the side and say, look, my bloc partners are a bit resistant on a number of issues, but I'll be most affected if these kind of contracts are not signed. I think we are, as farmers, we feel they did not do enough to be able to protect the farmers.
What more should have been done by Kenyan authorities?
A couple of things. Number one, they would have engaged the European Union in a more deliberate manner, purely to cushion the Kenyan farmers and Kenyan exporters. Number two, of course, there are a number of things which we feel from the streets that may have made the situation worse. The fact that for the last 10, 15 years, Kenya has been looking more into the east, other than concentrating on the west, which has been its traditional trading partner. That has a lot of effect on where we are right now.
Final question to you. Total horticulture exports in the 8th of July were about 8% higher compared to the same period in 2013. Given what has happened with the EU, with these higher tariffs in place, will we close the year in terms of exports flat or lower than last year's export levels? Much
lower because our exports are more expensive. Therefore, they are now looking for alternative markets. Egypt, Morocco, Ethiopia, and West Africa. That's where they're heading to, and they will shun any produce from Kenya in particular.
Ouch, that does sound quite aggressive. Might this, of course, affect Kenya's exchange rate problem as well? Because the Kenyan shilling has been weakening of late, and if your income in terms of euros and dollars is dropping, surely that will have a ripple effect rather on the Kenya dollar rate.
The worst is yet to come because the horticulture, floriculture has been bringing about 70 billion in foreign currency. Currently, we expect that to come down drastically in the next maybe 3 to 6 months. And of course, the dollar to and the euro to the Kenya shilling will go up. We talk about 95. That's what we're heading to, because again, appreciate the tourism is down. Coffee and tea is down, so the only other remaining foreign exchange earner was horticulture and floriculture. That one is heading now heading down again. So I mean,
the writing is on the wall, and it's going to be a bad year.
You can guess what I'm.
All right, we'll have to see what happens then. Thank you very much for your time this evening.
You're welcome.
We've been talking to Edo Murio. He's the team lead at MMC Africa Law. He's also a horticulture farmer right here in studio. Quick run through the equity markets here for you. Interesting day across the board. However, some news aside from the numbers you're seeing on the market. A new acting CEO in charge over in Kenya. Andrew Ashira is his name. He's the acting chief executive from October the 1st. He's a lawyer by trading. Used to run the compliance and legal unit before that. The JSE, third day of losses here, dragged lower mainly by mining stocks. Commodity prices not doing particularly well, and you can see that knock-on effect in places like Lonmin. That was down at a 5-year low, down 4.9%. Amplat's down 2.5%. Anglo Gold Ashanti dragged low as well, down 2.9% in trading on the day. We'll be in South Africa next. Transnet and BHP Billiton have signed a 10-year take-or-pay export deal on coal. And Microsoft and Africa. We'll be looking at the Microsoft for Africa initiative in a little more detail when we come back. So note 2 and 3. Welcome back to the program. Now, South Africa's state logistics company Transnet signed a $2.1 billion coal transport deal with BHP Billiton. The contract is on a take-or-pay basis. Now, that essentially means that Transnet will provide the trains. BHP is obliged to pay for its services regardless of whether or not actually any coal is shipped out. Now, Transnet said BHP is the first major client to commit to a long-term take-or-pay contract, and it hopes to formalize similar deals with 28 other firms by the end of November. Angelo Coppola has more.
The contract value is around $250 million per annum, or $2.4 billion over the 10 years. While this is the first agreement, Transnet is in talks with the 28 other major coal sector players and has committed to moving 810 tons in total.
It's not just this deal, it's also about the agreements with the rest of the industry, because it gives us certainty of revenue. It also helps in showing investors in Transnet bonds that we have certainty of revenue.
While the deal makes sense to Transnet, BHP Billiton says it also makes business sense to them. And this despite the planned demerger talks that the Australian miner is in the process of completing. The company wouldn't be drawn on providing more detail about the benefits though.
Well, it's good for both parties, but what it does do for both parties is obviously provide certainty. And certainty of 10 years is always a good thing for investment and also for the future.
Transnet remains upbeat that everything is on track for their November deadline.
Agreements are negotiated. There's one or two clauses here and there with this customer and that customer that need to be sorted out, but we're quite confident that it will be done in the next month and a half.
The signing of this agreement is seen as a bit of a coup because initially BHP Billiton had walked out of discussions with Transnet. However, it's the other 28 contracts that now need to be signed before the end of November. I'm Angelo Coppola for CCTV in Esalen Park on the East Rand of Johannesburg.
Now, barely 24 hours ago, Microsoft announced Windows 10. That's the successor to its Windows 8 operating system, as it continues to drive to unify traditional PCs and mobile devices. The next version of Microsoft's flagship product essentially aims to recapture the lucrative business market, which generally ignored Windows 8. Now, the launch comes even as Microsoft's chief executive Satya Nadella called upon the youth to grab the immense opportunities that lay ahead of him. He made those comments in India. He said he believed that a disciplinary approach to innovation is going to shape and change the world in what he described as a massive technological shift. Now, India is one of Microsoft's largest markets, but it may be dwarfed in terms of potential for growth by Africa. So what exactly is the way forward for Microsoft on the continent? How does this factor in when it comes to the available youth and innovation opportunities in this continent? To answer some of those questions, I'm now joined by Fernando de Souza. He's the General Manager in charge of Microsoft's For Africa initiative. He's with me right now. Thank you for your time.
You're welcome. Nice to be here.
For the casual observer, how would you describe the For Africa initiative? Is it a social enterprise? Is it a venture capital outfit? Is it an incubator? What is it?
It's an investment by the company in the continent because we believe in the promise of the continent, and it focuses on the economic development of Africa through the enabling power of technology. So it's not social responsibility, it's not philanthropy, it's not even a venture capital investment. It's rather looking at the foundation and saying, what is the power of technology to enable economic development? And we look at economic development as the equitable distribution and creation of wealth through innovation, through the creation of skills, through the development of human capital and through access to technology.
Let's focus on human capital, because skills is one of the 3 core areas for Africa focuses on. Where are the skills gaps that you see across Africa based on the work you've done so far?
So if we think about skills gaps, you know, there's the discussion that I think everybody focuses on, which is skills for employability, where a very large percentage of our graduate students coming out of college, coming out of school, find it hard to find employment in the formal sector, right? Yet within many, many industries in the formal sector, there are gaps, there are actually open positions, and so there's a skills sort of imbalance between what's coming out of the traditional education system and what 21st century innovative companies are looking for. And so there's a focus in that, in creating those skills for employability, which really tend to focus around digital literacy to an extent, entrepreneurship, business development skills, as well as the ability, I think, to communicate. And this is a very, very important
So it's not enough to
aspect.
just create really talented coders, but you also need to round them off by essentially having them understand how to read a balance sheet, how to structure a business, that sort of thing.
Correct. A great idea only goes so far, and beyond that, one has to start to think, okay, how do I turn my great idea into monetized reality? And that monetization happens not just through attracting an investor, because sure, an angel will invest in you, and then what? Right?
How do you take the product to
How do you
market?
take the product to market? How do you make it competitive? How do you think about global competitiveness? And I think, again, to your question around the skills gaps, Africa needs to think of itself as a global player. So therefore, the skills that we instill in our youth and we instill in our public servants and so on need to be absolutely on par with the best in the world, because I think that's the position that Africa deserves in terms of its own capabilities and its own growth.
Access to tech, that's something else you mentioned. As I understand it, that focuses on low-cost smartphones on one hand, but there's also a component of cloud services as well. Cloud services generally in Microsoft is doing relatively well, but cloud access across Africa, how is that going on?
It's actually going very well, because I think what we want to think about, so not so much the low cost, but the affordability. And I think when one starts to look at equating productivity, an ability to reach markets, an ability to grow one's addressable market through the use of cloud services, through the use of creating value propositions on a cloud platform, all of a sudden you start to realize that what seems to be potentially a high investment or it isn't, because the return is so much better, being able to go way beyond the traditional access that one has.
Final question to you, with regard to Nokia particularly, because when you talk about low-cost access on platforms like smartphones, Nokia is a fairly big part of that. And across Africa, I mean, they've got a huge footprint. The acquisition was finalized in April. How does it fit in to the wider For Africa program?
It fits in very well. In fact, prior to the acquisition, when we launched Microsoft for Africa, this was one of the very, very key relationships that we had actually been working on, which was to really partner with Nokia. Nokia had a program called Nokia Life, which had a lot to do with creating services on the Nokia platform. And then they actually launched, I would like to think, as a direct result of some of the work we did with them, the Nokia 520 device, which is the smallest, in fact turned out to be the best seller, and at one time was the #1 selling device in Kenya, was the Nokia 520, and it really did very, very well across African markets. And so bringing the smart mobile technology to Africa, and we're seeing very rapid growth in the adoption of smart technology, is something that Nokia has done very well with, and we continue. It's strategically part of our investment.
All right, sounds like you guys have a lot of fun doing what you do.
We do.
We'll have to leave it there for the time being, though. Thank you for your time this
You're
evening.
welcome. Thanks very much.
Fernando de Souza, he's in charge of Microsoft's For Africa initiative, has been with us in studio. Let's make a quick run through commodity prices here for you. Now, a little earlier, we spoke about Cote d'Ivoire's numbers with regard to the output for its 2013-2014 cocoa season. Ghana has announced some interesting producer prices. It's bumped up farm gate prices by about 50%, $1,600 a ton for cocoa for the next season, 2014-2015, compared to about $1,000 or so per ton, which was being paid out by government last year. We've got plenty coming up, including a focus on tourism in Zimbabwe, rather. It's bucking the general narrative about economic malaise in the country. We'll tell you why next. Now then, tourism in Zimbabwe is on the rise. It generally bucks the trend and the narrative of what you generally hear is an embattled economy. The country was voted as the world's top tourist destination by the European Trade and Tourism Organization after hosting a largely successful UNWTO General Assembly last year. Now, it appears that things in Zimbabwe's tourism sector might get better. CCTV's Farai Makutuya has this profile of some of the entrepreneurs who are driving growth in grassroots tonight.
Zimbabwe has been working hard to win back tourists, and its efforts seem to be paying dividends. Luke Brown has been traveling to the United Kingdom for the last 4 years to promote Zimbabwe. He's just returned from one of his trips and confirms the country is shaking off the risk tag, especially following peaceful polls last year.
There's been more and more interest every time I go. The UK is definitely coming around to the idea that Zimbabwe is a great destination.
The Victoria Falls remains the biggest draw card, but the industry is successfully punting the country's other attractions.
They are definitely willing to go past Victoria Falls. They've been coming back to Vic Falls for the last couple of years in numbers to rival the 1990s. But they're now looking at Hwange, Mana Pools, Kariba, and sometimes even further into the country as well.
Statistics make for good reading, indicating growth in arrivals, revenues, and employment. And investment in the sector is up too, particularly from boutique operators who are carving out a niche in the hotel business. Tucked away in Harare's leafy suburbs is Amanzi Lodge, an exclusive bed and breakfast that attracts mainly international business travelers. It's winning fans because of its bespoke service.
We know most of our guests by names, we know their likes, we know their dislikes, and as a result we create that personalized experience more so for them than your average hotel.
Every one of its 16 rooms are also unique, each named after a different African country and each with its own signature decor. It means every time a client comes back for another stay, they have a completely different experience, which could even include a shower under the stars. But perhaps their biggest trump card is the ambiance. While a guest is confined to brick and mortar in a normal hotel, here they enjoy the lush scenery and tranquil settings.
It creates that break from your ordinary business trip. After a hard day's work, who wouldn't want to come back to a place like this?
It seems more and more people are in agreement.
Well, I must say they've got the formula correct. In the short time that I've spent here, all I want to do is sit back, relax, kick my feet up, and drift away. Farai Makutuya, CCTV, Harare, Zimbabwe.
Right then, I tell you what, I don't have a hammock in the studio, but I do have your Forex numbers here for you. Quick run through the currencies and the trends underpinning what we're looking at today. The Central Bank of Kenya, of course, was in the market today, sucking out about $67 million worth of excess liquidity with repos, term auction deposits. It seems a new red line, according to trader chatter, is 89.50. That's a point at which the central bank will tend to step in and try and minimize volatility, but it still is under pressure from long-term trends. Now, on Global Business tomorrow, we'll be focusing on two different things. A Ugandan beauty for starters who's got an absolute passion for farming. We'll have that story coming out of East Africa for you. We'll also bring you the final outtakes from the Africa Global Business Forum as taking place in Dubai. CCTV's Smedo Miller is covering that in quite a bit of detail. But that's it for this edition of the program. You know the usual drill. Feedback to Global Business Africa at cctv.com, Facebook and Twitter. That's where we provide the news 24/7 when we're not on air. We'll see you in the next 23 hours. Thank you for watching. I'm Ramanyang.